Hi. So we're here to talk about the state of under-collateralized loans. And just in case anyone does not know what under-collateralized loans are, under-collateralization is the ability to issue loans without requiring borrowers to put up more capital than what's being lent. And so far, DeFi has been dominated with over-collateralization to protect against asset volatility and loan default. But for DeFi to grow, many people think under-collateralization is the key for platforms to be able to issue loans without requiring so much capital up front. So how do we financially enforce something that isn't financially backed when so much of legacy finance rides on collateralizing our personal credit and reputation? So with me is Ryan Berkun of Zero Collateral, Rafaella Baraldo, who has a new project called Pods, which is about derivatives on chain, and Jana Petkanic of Eldorado.io, which is a crypto exchange in Venezuela, and she's also working on a stealth blockchain-based lending platform. So first, start with Ryan. Hi. Tell me about Zero Collateral and how you are doing this.
Hey, good morning. Thank you for the introduction. Would love to talk about under-collateralized loans. Really excited to be here. So Zero Collateral is an unsecured lending platform on Ethereum. We have a very vanilla lending market where users can put in collateral, but the goal is to get down to zero. And we actually connect to data and analytics from the traditional financial ecosystem. So borrowers, they can opt in to providing data about themselves, whether that's through their bank account, through credit reports, educational history, even things as esoteric as GitHub profiles. And all that data gets fed into what we have as open source algorithms to create kind of an open source credit score, credit risk, that then the borrower can use on chain as they request the loan. What's pretty exciting about what we're doing is there's also a complete feedback loop in that we connect with debt collectors, we connect with credit reporting agencies, so that it really creates the full cycle of an unsecured lending market in the same way that we have in the traditional financial ecosystem today.
So how do you keep all that? I mean, you keep it all private, yeah? I mean, the crucial data. And what do you use to keep that private?
Yeah, so we use the cloud. We use the cloud and we use trusted nodes. So the actual computation, as these risk models are large computation sets that can even include AI analysis, we have cloud nodes. At the start, as we launch our network, they will be permissioned, but eventually they'll be permissionless, and we'll be using something called an enclave. An enclave is an actual environment that can process data without having to see the data itself. We're also exploring ways to use ZK snarks and other technologies to maintain privacy of the data while still running the computation and providing the value for the borrower.
So you're currently doing this, right? So how do you mitigate against people defaulting on their loans? Because people must do that, yeah?
Yeah, of course, that's a question we get asked all the time. So there's two worlds here. There's one analysis pre the loan initiation, and then there's the effect post the loan initiation. Pre-loan initiation is taking in all the variables that we can collect from the borrower. The borrower opts into the data they provide, and our credit risk algorithms attempt to calculate the most accurate analysis of interest. And actually, the more data you provide, the less collateral that's needed. As you mentioned, our data is collateralized in the real world today. We follow that same traditional model. There's two avenues that you need to analyze whether a debt may or may not happen. One of them is the ability to repay, and the other is the willingness. So for one of the first risk algorithms that we've published as open source is the ability to repay. We're taking into account a risk parameter called loan to balance. So you can actually connect Plaid trustlessly through the platform, and we take the lowest balance of funds that have been in a physical bank account over the past 60 days and apply a ratio to that. Let's say it's 20%. If the lowest have been $1,000, it's $200. That is actually applied to the collateral needed on chain. So we start kind of mixing these two worlds, saying the borrower must have the ability to repay at least this amount of a loan, and we apply that to the to the Ethereum blockchain and the on-chain space. And then the other half of the equation is when the borrower does default, how do we actually have, or is repaying the loan, how do we have a stick and a carrot? The carrot being, if you do repay your loan on time and on chain, we can report that back to the traditional agencies today. They see some type of identity attributed to an ETH wallet, and that can actually have a positive effect on your credit score today, which creates this transparent, open mechanism for you to actually have a more positive score. Likewise, we also have that kind of knowledge that if you do default, we work with tech-friendly credit agencies, so they can actually come and say, hey, we'd like to buy the debt off you, or we'd actually love to help you repay this loan. So it's for looking at it from multiple angles, but having all those pieces in check to really maximize our ability to recover loans.
It's kind of building up, isn't it? A credit picture of somebody using technology that is still itself being developed. So this is very much a nascent field. But is there a bridge for traditional fintech users to find a way into DeFi like this?
Yeah, that's a great question. So I think what was amazing that happened in DeFi over the past year past 2 years was first stablecoins, the ability to transact value without the fluctuations. And then the over-collateralization, because that gave the opportunity to say, hey, I have a digital fiat, and that can earn interest. Now, that is amazing to start bringing in people who are just completely outside of blockchain and simply want to earn better yield. The issue is it still poses risks. There's lockup of funds, and we're not sure if we can trust these protocols yet to the extent that someone using an FDIC-insured bank would. So what we really feel is that next kind of stick, or that next demand, is the ability to not have to trust the chain, but you can actually extract value from the chain immediately by taking out an unsecured loan. Those who are looking for different types of loans, they simply plug in information.
Phase 2 is a really big open greenfield space. And so I want to talk about Vitalik about a year ago put a couple proposals towards execution environments. I'll talk about that for a moment and move quickly into some other interesting things that are happening and that Quilt's been involved with. But within execution environments, one of the really valuable constructs of this is it keeps ETH2.
Oh, it's gone. Right. Sorry about that. I don't know if that was me or if that was something else.
But I guess my point is the borrower process, when we make that seamless, they don't have to think about the blockchain. We really extract what's happening behind the scenes. We can see people who would use something like a Robinhood or a SoFi today approach the blockchain ecosystem through an interface that they feel comfortable with, and simply say, hey, I want a loan, can I get a loan? And there's money in their current fiat bank account. That will really drive people into the door who didn't know anything about blockchain and didn't need to.
Okay, cool. We'll come back to you in a moment, Ryan, but let's turn to Rafaella. Rafaella, we call you Barbie? Yeah, Barbie?
Yes, Barbie, it's my nickname.
You have there's something really fascinating you're working on, right? I mean, we'll come to your work in with the exchange later, because you started in Brazil, I think.
Oh yeah.
But tell us what you're working on. What is this stealth project?
Okay, so I'm just going to tell a little bit about myself before, which is I had a career in investment banking in Brazil and investment funds. Always were to a trading desk or commercial roles, and I've been working with blockchain for about 3 years now, and I participated in a few hackathon projects. One of them was called Oh My DeFi, and we were finalists at ETH Denver this year. And Oh My DeFi was doing options on chain, so we had our own protocol for options. We did our own version of what options would be. We started doing ETH options, and then we also did long straddle by combining puts and calls. So we're no longer going to continue Oh My DeFi, but we are going to start something new that's called Pods. Pods is going to be different ways of seeing derivatives on chain, structured projects, and so on. But that is something super new. We're going to post more about it soon, so stay tuned.
So you basically work with all kinds of loans, right? I mean, so how are, what kind of loans do you work for in a decentralized way? Because there are many different kinds, yeah.
So I wouldn't say that we do exactly loans. What we do more options actually. But where I think it connect with the over collateral or under collateral is when we think of the over collateral and under collateral as a binary thing. So this is either over collateral or under collateral, but we never really talk much about how it could be a little less over collateral, or maybe just collateralized, just 100%. Maybe we don't need 150% as a collateralization ratio. And that is the main thing I've been working on recently. And I would say that, for instance, if you're able to secure and protect your collateral, which as of today, over collateral is mostly ETH. So if you're able to put a put option of ETH together with your collateral inside a vault, for instance, you should be able to make sure that your collateral is 100% safe. So in that case, you wouldn't need 150%. And that could be a very efficient way to actually deal with your collateral, because you're going to have the same amount of ETH and you're going to be able to get a bigger loan on top of that. And that is not over collateral, it's just collateralized. So that is a mid term between what we've been doing. And maybe we did over collateral before because we didn't have options on chain yet. And because we were just starting, and that was looking back the most intelligent thing that one could do is actually put more than you need and make sure that the price oracles and liquidation systems would work. But I think that this space is changing so fast, and now we're able to do things that we were not able to do before. So probably we could see a different type of collateral or collateralized loans to exist.
So this is an incredibly new space, and the fact that these like options and other things are coming onto chain is making you have to think about whether the over collateral model was the right way to go. I mean, and this is now a kind of new paradigm almost.
Yes, exactly. And I think that this is probably going to work better for products and for loans that have a maturity date, because options have a maturity date. But if you're able to roll your option, which is essentially let one die or mature and then buy another one to secure the same capital that you're trying to save and take care of, then you should be able to roll that. And even doing that is cheaper than actually just allocating 150% or more in ETH just to sit there and wait and make sure that and still get this exposure to price oracles, which we saw it could be interesting.
Right. Okay. Well, lots of different options coming up there. I'm sure you're going to have loads to announce in the near future. Let's move on to Jana, who is from Venezuela originally. And you've been building Eldorado.io, which is a pretty successful exchange based, and you're also offering trustless trading on Ethereum. So these are two separate things, yeah?
Yeah. First of all, thanks for having me. And yeah, my name is Jana. I'm originally from Slovakia.
Oh,
but
Slovakia.
I'm based out in Germany. But I work on two projects. So one is Eldorado. This is a financial service for Venezuelan people. We'll be launching very soon. We have the platform developed. And the other one is a blockchain-based lending for Australian dentists. And this one will be running on Ethereum. So
right.
yeah, to make it clear.
The blockchain-based lending is for the new project. Right. Eldorado doesn't really get involved in you're not involved in lending in that.
Not yet, because in Venezuelan environment it's very difficult to facilitate some standard financial services, because like in hyperinflationary economy, we cannot think of credits or any kinds of loans or mortgages even. So therefore, first we have to focus on onboarding people into our service, which will be offering stable coins. And then the next step we are thinking about is obviously, it just comes naturally, to facilitate other financial services.
So how do you see that being received somewhere like Venezuela? And how easy is it going to be to achieve something like that?
I would say a big advantage Venezuelan environment has is that users, they are in a real need for alternatives. So it's completely different situation than if you are speaking to someone in Europe or in the US and you want to onboard them into decentralized finance and they are like, okay, just give me some, strong value proposition and I will think of it. But in Venezuela and we see other countries which might require like financial services based on blockchain, such as Argentina or Peru. This is very natural for people to think, okay, I need to decentralize. I need to go to decentralized finance products because I need to survive in some way. So this kind of environment and these dynamics we can see in those markets, it helps with initial user acquisition.
Right. Okay. So, but this is early days yet. You're going to start starting with the exchange and offering loans. What, maybe towards the end of the year, or how do you see it?
No, somewhere next year.
Somewhere
That's
next
our roadmap. Yeah.
Okay.
But for loans, as mentioned, I'm working on a stealth blockchain-based platform offering lending to Australian dentists, and this is very attractive because.
Australian dentists in particular need under-collateralized loans. I'm absolutely fascinated to know.
That's a very interesting question, actually, because it's been 3 years I work in decentralized finance and cryptocurrencies in general. And one thing I realize is that when we want to achieve the network effect, on the borrower side, and we want to target borrowers with a clear risk assessment and with a sustainable credit score, we have to maybe first think, okay, who our users are and what needs do they have? So here in with Australian blockchain-based lending for dentists, I have a network there. So we know the network, we know the people, and from that we realized, okay, this network can be covered for lending through blockchain-based under-collateralized lending platform. It went other way around. Yeah.
It's quite interesting because strangely enough, my dentist is also into cryptocurrencies. And I don't know whether this is a trend among dentists worldwide, but I mean, is it really? The dentists are particularly...
Yeah, I don't know to disclose too much information, but we are also talking to dentists in other jurisdictions, and they are very interested because they definitely are borrowers, but borrowers in this traditional finance sense. And the second, they have been having business with a stable cash flow since years. So for them, they feel very confident that they can opt in for new services and for innovation, because the leverage they can get can be way higher than they can think of.
Right, okay. So, I mean, what do you think is the biggest challenge going forward in under-collateralized lending? Can it go global eventually? I mean, obviously we're right at the beginning, but I mean, what are the challenges for you?
I think there is two challenges. The first one being the user experience. So yeah, I only tried once to tell my father, go to this website and check out this decentralized finance product and sign up and earn interest. And I didn't tell him more because I wanted to try out what the user experience would be for an average person, so to speak, right? And he wasn't able to get a loan because he got confused halfway, So I think user experience is something which is a bottleneck in onboarding new DeFi users. That's the first. And the second is that money is a cultural thing. So, when talking about lending in Mexico, for instance, it's completely different than lending in Africa or lending in Australia, right? Or in Venezuela. So I don't see any decentralized finance platform going mainstream and global and which will facilitate under-collateralized loans. So,
because do you think partly because the regulations are so different in different countries, or why?
From my previous experience, when we facilitated loans for Mexican farmers, basically in Mexico, Mexican farmers, the way they are asking for loans is that they create clusters, communities, and they're asking as like one, they're applying for a loan as one. But this community-backed loan framework wouldn't work in Africa, for instance, in some regions, because there is a lot of tribalism still, and there is like people were slaughtering each other maybe in 90s, in some regions. So you cannot, build the same framework which works in environments where people can benefit from the community in some cultures where the community is non-existent.
So this is going to require what then? Kind of, making separate arrangements for separate communities, or what's the way to handle it?
Yeah, I think definitely cultural aspect is the first thing to consider when rolling out a global solution in finance. And the second is it takes time and it takes market insights to come up with, okay, now we feel confident that we can roll out the financial service to those people. Like in Venezuela, we are not going to start with lending right away because it's been like 5 years. The hyperinflation is really, really bad in Venezuela. And many of those people, they might have even forgotten what is the lending about, So I think markets worldwide, they are in different levels of maturity, and they are like, some of them might be ready for loans based on blockchain, but some of them might not yet.
So what's the primary market, do you think, at the moment for this?
I think Australian dentists.
Amazing. Okay.
Yeah, I wanted to... what I want to say is like the primary market, from my perspective, is a market with a stable cash flow where people are users of traditional finance and are not happy with one or two features traditional finance offers them. So, you can approach them and say, here is my DeFi product. It facilitates this. These features are better. Are you interested? And given that, we can try out which frameworks work the best in under-collateralized lending. And then we can roll out to less certain markets, so markets which yield into higher risks.
So, contrary to popular opinion, possibly, Venezuelans are not going to be rushing for uncollateralized loans. It's more likely to be people who are already familiar with the technology and, like the Australian dentists, perhaps. Okay.
Yeah, definitely.
So let's broaden things out now and just let me ask all of you, really, what markets or use cases do you think will be the first to rush to under-collateralized lending? Shall I start with you, Ryan?
Yeah, I'd love to step in there and build on what Jana was talking about. I actually think that money is universal. It is one of those concepts that all of us have a tangible interaction with on a daily basis. And because of that, it can cut through those cultural barriers at a basic layer. And because of that, I think the way that we view under-collateralized loans getting into the market is very different from the different abstraction layers that you want to look at it from. At the base layer, you have Ethereum, where the money flows. And as Jana was talking about, there's been hyperinflation in South American countries. And what's amazing is you can have a stable coin that's backed by the US dollar that doesn't represent that inflationary mechanisms. And with under-collateralized loans, we see a base layer of essentially pools of capital, pools of liquidity, where anyone around the world could take money from. And I think that's a really powerful concept. It breaks through the barriers of needing to maybe trust a community, because there is this decentralized open source world where you can come to some interface and there is money that can arrive in your bank account by simply plugging in your information. I think that's really powerful, and even those who are used to more of that community type feel can actually have a more powerful, seamless experience. And with that, I think we look at the next abstraction layer on top, which is the front end. The beauty of blockchain is that we're creating protocols that have liquidity, shared liquidity pools from anywhere around the world. But anyone can build a front-end service on these open source protocols. So that front-end service could connect to that bank in Africa, and it could connect to that bank in Venezuela, and deal with specific regulations in those jurisdictions. For that go-to-market, I think we're kind of ignoring the main people here, which is DeFi. We got 150,000 people in DeFi who have pains, who need loans. And what we're looking at is personal loans are really the first. I think COVID's a great example of a time where a lot of people do need financial help. Over 10% of the US economy is unemployed today. So there is financial stress, and there are very strong reasons to take out loans. And I think that's universal across the globe as we're all facing a financial crisis. But breaking out immediately out of DeFi, I think Jana's right. It's definitely people who are technologically literate, people who would be using some of the fintech apps today that would be able to transition into the technology that we as blockchain ecosystem offers.
Right. Okay. Rafaella, do you agree with that? It's mainly DeFi users first, right? I mean, obviously they understand the tech.
Yeah, of course. I agree 100%, Ryan, with your comment about this. Especially, I also believe that the front end part is going to have a very strong challenge around regulations and in different jurisdictions. And but I honestly think that the one that can actually do that and have a good spread to offer, like reduced to spread to offer for loans in the country could actually succeed. For instance, Brazil has ginormous interest rates for loans, especially for personal loans. Credit cards interest rates here are ridiculous, could be like 300% a year. And that's like what we know. This is the general understanding of interest rates for personal loans, for instance, in Brazil. But regulation is a big problem. So the one that can actually, after DeFi, I agree that go-to-market starts with DeFi. And then after DeFi, probably DeFi protocols. And then after DeFi protocols, like CeFi. And then you go to exchanges. And then from the exchanges that already solved this issue around regulation, you start offering those under-collateralized loans. And then at last, you go directly to the consumer that is not DeFi native, right? And yeah, I guess it's that the same Ryan.
Okay, and what do you think, Jana? What kind of markets or use cases? I mean, we've talked a little bit about this, but I mean, DeFi markets, how or kind of DeFi users, how prevalent are they outside the Australian dentist community for you?
Well, I do believe that current DeFi users are the first go-to-market, obviously, because they understand there is the user experience and user journey is smoother. And then the next markets, obviously, there is this mainstream narrative which says, okay, maybe the countries with a very favorable jurisdiction towards innovation and towards DeFi will be adopting the new products more. But the thing is, like, there is so many countries in the world where regulators, they just don't know how to regulate those products. So I think very important moment can be, to recognize in which jurisdiction there is the potential to help regulators to regulate the DeFi right way. And that could be the market where you find your new user base. So yeah, I wouldn't see regulation in general as a big issue or a big bottleneck in onboarding users into decentralized finance. And also, I know of projects who had regulatory issues, and they tweaked the application into, because as Ryan said, you have Ethereum being the liquidity pool sort of, and then you are building applications on top of it. And application is the one which shall comply to the regulatory framework. So what you can focus at, you can build this thin layer on top of Ethereum, which is at the edge of compliance or not compliance. And you can take it from there, and then you will see how the market is adopting it or how the regulators are viewing it. Because there is still a lot of ambiguous explanations, what is regulated and what is not. And in many cases, it's a matter of interpretation.
So how are regulators actually dealing with this? Because, I mean, you know, we've got these certain countries kind of issuing regulations, recently Germany. I mean, but are they dealing with regulations for DeFi products like under collateralized loans? I mean, what are the countries at the forefront of this, do you think?
Yeah, so I guess here in the States, so we deal with this, of course, because we interface with these third parties. There is compliance that has to be taken into account. The beauty that DeFi has is that we're non-custodial, and that's massive. If you look at the P2P lending industry, because that's what DeFi is immediately competing with, there is heavy regulation and compliance surrounding who is the lender, and that's a big facet because someone like a SoFi, a Prosper, a lending club, they actually have to hold the money in a bank account themselves, and thus have regulation and the licenses surrounding that. The beauty of what we have in DeFi is there are developers who are able to build a protocol, they submit it, essentially deploy it to Ethereum, and it's hands off. When the money is entered, the money is entered, and it moves around. The beauty is that DeFi and blockchain in general has oriented a user-first experience. It is user opt-in, it is user make transaction. There is no submit my data and you go do with it what you will. So what becomes amazing is we have this lightning of regulation or compliance from the liquidity side and holding the funds, which then allows us to focus on the other pieces of compliance. One of that is who's the lender, making sure there's no broker-dealer as an arbitrator in this, and building a system where it really is an open platform for tech around the world to compute and actually create these credit models for the average consumer, for the borrower. And that can really start interfacing a place where compliance does fit in. And I think we're at an interesting point because we do have to balance these two tectonic plates of this brand new technology that can truly transform the way we even see finance, and the world of compliance today, which of course has been built up to protect people. It isn't there just to stop innovation. So I think it's going to be a balancing act that we're going to see continue evolving over the next 5 to 10 years.
Okay, so how I mean, products are adapting to this kind of these issues. But I mean, as you say, you've had advantages. But what I mean, will there have to be compromises made in the future? Do you think? It's open to anyone who would like to answer. Rafaella, what do you think? Compromises in terms of sort of designs and features that are going to be available in order to stay on the right side of the regulators?
Well, I think that's a very good question, actually, in the sense of I don't think that companies will be able to provide something that is not compliant with the regulation whatsoever. And they're going to have to work their best to provide the best experience for the user that they could ever provide, right? So I think that at some point, especially those that are creating the actual applications and going with the regulators, they might not even get the chance to build something that would not be compliant, because they know that they would be out of the game if they do that. So I think that they will start brainstorming and try to create solutions around what they actually can do.
Okay. So in the future,
yeah,
I mean,
maybe a quick remark. Regulation, I think, is my observation says that regulation, for instance, in emerging economies is like pretty non-existent as it comes to DeFi. But sometimes, regulation in those countries, like we see Argentina, with very strict capital controls. Okay, it doesn't relate to DeFi, but if you are delivering some financial service built on blockchain into Argentina, then you have a question, okay, you want to help those people because there are strict capital controls and you want to deliver the service they actually need. But according to official regulation of Argentina, you cannot. And now there is this, it's not a regulation question, but it's a moral and ethics question now. What do you do?
Yes. Gray area.
Yeah, it's, well, you are based in Brazil, right? So I think, yeah, the situation might be very similar. So,
Actually, yeah, Brazil and Argentina kind of are different. But yes, I understand that the situation there is very harsh, and the capital controls are getting worse. And I think that there is a gray area. It's a big gray area. It's like what they're going to do from now on, and I don't know. I think it's gonna take a lot of thinking and try to understand how to best address that. I would expect to see Brazil moving to a more strict situation as well in the future based on the recent things, but that is another topic.
And bouncing off that, another point you brought up earlier, Rafaella, were credit card rates, some going up to 300%. It's wild, and these rates are taking into account the political environment, and they're taking into account hyperinflation, where there is actual an arbitration or arbitrage event, because in the States we don't have that. These services.
Yeah, you don't. But one thing about Brazil is that we don't have hyperinflation yet. Okay. 300% was without hyperinflation, just because our financial system has only a few big banks that take over the thing, and they decide that they're going to leave it at 300% a year. Why not? You know, so I don't know, US, you have 7,000 different banks. Here we have only a few. Like 80% of all our banking system is within 5 banks. Big.
That's nuts. And I love how DeFi is able to we're going to bring the competition to the centralized areas. So
yeah, which is also a big challenge on the regulation side. So because the regulation would be interested in keeping the, banking power as well. So the moment where you allow people to go and move to a undercollateralized loans or to DeFi, you kind of lose that, right? And so I think that's going to be a very big challenge in Brazil, especially.
Yeah, and I kind of love this idea that liquidity provides, where we can start blurring these lines of what is a loan and what is a credit line. So it starts becoming this fluid process where the regulation might not even know what to call this, and they're kind of just accepting it as loans, but people are treating it like a credit line, which becomes interesting as a target into those type of regulatory systems.
Exactly.
So do you guys maybe think that this is, at this point in time, whether everyone is facing this unprecedented crisis, is a time where we can change the way that people lend, that DeFi lending can compete finally with traditional financial lenders? Ryan, you look set.
Yeah, okay, cool. Yeah, I can go. Okay. Yeah. So what's been amazing is people we've been speaking with in the lending space, just in the traditional financial ecosystem, have been seeing massive spikes in volume and requests. A lot of people right now are looking to refinance. A lot of people are looking to get out personal loans to cover the cost of dealing with this. And I think we have an opportunity to offer better rates, offer a better experience, offer all the advantages that decentralized world can create, but articulated to the value propositions that some of these people want to have. And part of that is just a frictionless experience, a seamless way where I come to a platform, connect myself, and I can actually take out a loan and there's money in my bank account. If you look at some of these platforms, it's very subjective and it's prone to human error. Even sometimes in the decision of should we give this person a loan, an actual interview is conducted. And there's a lot of subjective outlines that go into those criteria. So what I think we have an opportunity to is make a frictionless experience for the borrower, where they can feel like they can actually trust this financial system and feel comfortable that they'll be able to pay it back. A really awesome kind of tangential parallel world is telemedicine. where people today think of going into the hospital as a negative experience. It's kind of this area where everyone's sick, you wait in line, but with telemedicine, you can sign up and be talking to a doctor in 10 minutes in your home, and that's a very positive experience the user can have coming out of it. I think we have that opportunity to bring that to the financial system, and especially people now in a crisis when everyone's flooding to take out a loan or do something to better their finances.
Rafaella, maybe we could bring the dentists in, or rather,
yes,
to make it a really all-round experience. But do you guys agree, Rafaella and Jana? Because I think we've only got a few minutes. But I mean, what do you see as the sort of the challenges and how DeFi can compete with traditional finance?
Yeah, my general take on it is that DeFi and traditional finance will not compete in the future as long as there will be enough smart people in traditional finance to recognize the opportunity that traditional finance brings. And there is still a lot of people working in banks and thinking of innovation that way, that you have a bank and you create application which will be purely DeFi, but they will leverage on the network they have built over the years. Because also, when you speak to bankers, I think many of them, they are aware that they screwed up the traditional finance system and they want to do better. Many of them want to do better. So my take is that now we are sort of having the perception that there is a competition between DeFi and traditional finance, but I think it will fade away in the future, and we'll be thinking of finance in terms of decentralized automatically without using the word decentralized, I think.
Right. And Rafaella, what do you think?
Yeah. So to be honest, I don't think that DeFi as is right now is ready for the real traditional market. It's not. We still have a lot to develop, and we still have a lot to face as challenges, as bugs, as experience UX and everything. But on the other hand, I do think that as a technology, DeFi has what it takes to actually provide a better infrastructure for finance. And in the moment where I think that in a few years, maybe, or even sooner, we're going to be able to actually provide that usability in those technology pieces for banks. And then when they realize that this is actually a lot more efficient from a cost perspective, and from actually also from the operation side, the transactions are faster, you have 24/7, you can have actually a bigger liquidity because you connect the entire world, you can access different markets because before, I don't know, was it an exchange only have a few things as commodities, but other exchanges has other commodities products. So where now, once you have this place in this DeFi space where everyone is connected, all those markets are connected, liquidity actually tends to increase. So that's going to be a lot better in the future for them as well. So I think this shift is going to happen soon. I hope soon, in a few years. And yeah, to be honest, I think it's the future of traditional finance, but we're not ready for it yet.
Right. Wow. Well, that's an awful lot to look forward to, really. And it sounds like you all have your work cut out for you. Please let us know about when your pod platform launches, Rafaella. And Ryan and Jana, thank you both very much. I think we're running out of time, but we might have been a minute over. So, yeah. When are you planning to launch exactly, or you have?
We have a few things to do. We do have already a landing page. You can subscribe to our email list, and hopefully over the next 2 months or 1 month, we're going to be ready to launch something.
Okay. And Ryan, you have already launched your platform, so best of luck.
Well, we're actually going live with the real thing. We have an alpha out, but we're going live with the real thing in the upcoming months.
In the upcoming months. Okay.
Same for us. We'll be launching Colorado somewhere around August, September.
Okay.
So follow us.
Yeah, for sure. Exciting space. Well, thank you all very much, and best of luck with all your projects. And I'm just expecting to hear much more from you all coming up. So, yeah, thanks. And
thank you.
You too.
Thank you. Thanks,
Thank you very much.
Take care, everyone.
Have a great day.
You too. Bye-bye.
Hope you
Ciao.
enjoy. Bye-bye.